the tech-heavy Nasdaq leading market gains as investors digest mixed signals on tariffs. With risks from tariffs hanging overhead and the AI trade under careful examination, tech may be facing a pivotal moment here. Neuberger Berman Managing Director Dan Flax joined us now to discuss. Dan, you're steeped in a lot of these tech names. It's good to see you to talk about what's going on here. I'm going to pose a similar question to you to what we talked about earlier at the top of the show, because we've now been seeing this 3-day rally. Tech has been leading during that rally. Is it sort of anticipation of the earnings we're going to start to get in earnest with Alphabet? And do you think that then is a catalyst potentially for these names to go higher?
What we'll see with Alphabet and some of the other big names next week, such as Microsoft and Amazon, is that they're continuing to execute in terms of on their product cycles. Google with search, Amazon in terms of continuing to redefine the e-commerce experience, more one-day delivery. And so what's important for these companies is that even with the cyclical headwinds, obviously a lot of uncertainty with trade, is that they can innovate, execute, and really drive growth through this period, and more importantly, coming out of this period. And if they're able to do that, I think the market will see that over time, and that could drive outperformance. So we continue to like those names on this market pullback.
Yeah, hey Dan, do you think these companies and stocks have a chance to move back to new all-time highs? And we did see a breakout today in the XLK, which I thought was interesting, getting above the entire downtrend from February. So we've seen a really explosive move out of tech, at a time when tariffs still have not been resolved. So in your mind, does this give this any sort of further, conviction that these companies might be able to deliver, even though we're just starting the earnings period for the Mag 7?
If I look out 12 to 18 months, what I see is that companies, and I'll use Nvidia as an example, it's not that they're immune from economic cycles, but in their case, for example, they're executing very well on their new platform, which is called Blackwell. So that's ramping. There are obviously headwinds in China, and that will be a factor over the coming months. But the most important thing for Nvidia is executing on that product cycle, really delivering value to their customers. If you think about artificial intelligence and really the new wave of innovation around generative AI, you have areas that are really getting revolutionized. Think about healthcare as one example in terms of drug discovery, financial services with fraud detection, digital twins with manufacturing. And so Nvidia really sits at the heart of a lot of this transformation. And so if they're able to continue executing, attracting developers to their ecosystem, I think the stock can be a strong performer looking out over the next couple of years as it creates value for its customers. I think it can create significant value for its shareholders as well.
Of course, in the near term, Dan, that what you're saying about Nvidia is true today as it was 6 months ago, as it was a week ago, but all of that has been subsumed by tariff headlines, right, and sort of negativity and pessimism. So I'm curious, is the surge we've seen in the past few days reflective of the AI trade sort of reasserting itself, or what do you think it will take for that to happen in a more sustained fashion?
I think it's a little bit of incremental comfort in the last 72 hours around the tariffs, perhaps a little bit of a pause as the U.S. and China negotiate, as the U.S. negotiates with other countries. And so if the market continues to see that in the very near term, I think it will gravitate towards the names that have attractive growth prospects, like an Nvidia, a Microsoft, an Apple. And so these companies are going to be impacted by the economy and trade policies for sure. But I think the market is trying to see beyond the near term, and it's also trying to see what the new guidelines are. And as the new guidelines come into focus over the next several weeks and months, I think the market will look to companies that can lead from a growth and innovation perspective for the next cycle. I think the market has discounted a lot of weakness. The market assumes the near-term earnings picture will be tougher than it thought 90 days ago. And assuming that the market is correct, the next focus will be, what does it look like coming out of this period? And we look to be positioned in companies that we think can create value coming out of course, what remains a very uncertain period.
Yeah, that's great, Dan. I have a two-part question. One is that, when we look at the antitrust that's starting to happen across the board for big cap tech, I mean, it's sort of ironic that this is happening at a time when the competition is probably greater than it's been in 15 years. I mean, what's your thinking, first of all, on the whole antitrust, how would that be resolved? And second, what's your favorite part of technology? Do you favor this recent boom in software that we've seen relative to semiconductors, given the underperformance, and also hardware? What's the part of technology you feel should really shine for the remainder of 2025?
So I think that the regulatory overhang is going to remain a challenge for the big technology platforms, including Google and Amazon and Meta. I think these companies need to do more to explain how their business model works. In many cases, if you think about Amazon as one example, they are a platform for businesses to sell around the world, and I think they are adding value to those sellers on one hand and the customers on the other hand, and that is creating value for Amazon and its shareholders. But it and Google and the other digital advertising companies like Meta need to do more to really explain how these businesses work. And so we follow the regulatory dynamics very closely. I expect the lawsuits and the subsequent appeals will be a focus for the next 2 to 3 years and beyond. But these companies have to innovate and grow through that. We've seen with other industries, healthcare is one example, where regulation is really very much a part of the investing landscape, but there's still companies that can thrive despite that. If I shift to the tech landscape, where we see value is in software and some of the digital platforms at current levels. It's not that hardware won't be important. It will be. This in the very near term, it's going to take a little bit of time for some of the implications and the associated costs from tariffs to work themselves out. But if we reflect back on the last 8 years, there's been more trade friction, higher tariffs, and many companies, and I'll use Apple as one example, have been able to thrive during that period despite some of the challenges. Within software, we think Microsoft remains well positioned. Besides their core software business, we think the Azure cloud platform remains very well positioned. The market's concerned in the near term about growth, and Microsoft and the others, including Amazon Web Services, will see an impact from customers moderating spend in pockets. But I think the bigger trend, if I look out 12 to 18 months, is that cloud growth will remain healthy given the innovation that's going on there. And when we speak to customers, they see a lot of potential to expand their businesses on these platforms, which sets a company up like Microsoft and Amazon, for that matter, very well in our view.
Dan, really interesting to hear you say over and over again, 12 to 18 months, trying to look beyond this what's going on right now to returning to the focus on growth for these companies. Thank you so much for your time. Appreciate it.
Thank you.